Cathie Wood, a well-known investment expert and Tesla bull, had predicted a forecast for the future of Tesla stock. Known to be optimistic about the leading electric vehicle brand's future, Wood has taken it upon herself to warn investors of what's to come. With the stock's climb back up, it seems Wood was right all along. Tesla may be yet to reach its peak value, unlike what most skeptics believe. Wood has predicted that Tesla stock will go 3 times the value from here, with a target price of $3,000, saying that many are short-sighted and not placing their focus on what's coming. What are her reasons for making this prediction? How is Tesla faring in the face of increased competition? These are the questions we'll be answering in today's video, so stay tuned. Forecasting the stock market is a crucial part of the entire finance industry, and Cathie Wood is no stranger to this. Investors calculate stock values by predicting how the market will respond by using publicly available data. However, accurate interpretation of this data takes a certain level of skill, one that Wood has copiously displayed over the years. Cathie Wood is a well-known figure in the investment circles as the founder, CEO, and CIO of ARK Invest, a private, actively managed, exchange-traded fund that invests in local and global equity securities of corporations to achieve long-term capital growth. The investment firm famously owns stock in disruption firms like Coinbase, DraftKings, Roku, Block, Teladoc Health, Zoom Video, and Tesla is one of their top shareholdings. This has certainly made her an authority on all matters Tesla in our books. As she's a credible high-profile stock picker, we've been especially paying attention to not just her words, but her actions. The first giveaway that she might be seeing what we are not was her taking advantage of a drop earlier this year in the electric car maker's price. The ARK company increased its holdings and purchased Tesla stocks for the first time, following their sell-off when the stocks hit an all-time high. After their 8-month hiatus from buying new Tesla shares, when Tesla's stock lost 11.6% to $829.10 this year, Woods swooped in and paid a whopping estimated $27.76 million to acquire new shares at that price. Wood has always been a strong believer in the Tesla brand, and in one of her numerous interviews about the brand, she stated that she strongly believes that Tesla is at least 3 years ahead of all of its competitors in energy, despite the stock's recent sluggishness. Wood again recently doubled down, buying a second buy in the Elon Musk-led company, purchasing 42,124 Tesla shares valued at $39.45 million at the time of purchase. This could have been motivated by a number of reasons, based on ARK's previous estimations that with a high likelihood of Tesla reaching fully autonomous driving within 5 years, the electric car company's net autonomous ride-hailing revenue could reach $327 billion by 2025. We would say this decision makes sense, as theirs is not a company that is particularly risk-averse. Their benchmark for investing is in the innovativeness of a company, not based on past success, as traditional investors often do. So, what are most investors too short-sighted to see? Tesla, whilst being a new company having been around for about 20 years, has not just a very high rate of innovative success, but has also revolutionized the car game. By all indications, it's been steadily building its own successful background and proving that it's a company worth investing in. In her interview with CNBC, Cathie Wood says that although there's been a terrible market for innovation in recent times that has caused Tesla's stock price to plummet previously, that's not the entire picture. She makes a convincing case, citing evidence about how following innovation has always paid off, given how within the time frame of the beginning of the coronavirus pandemic to its peak in February 21, her investments were up about 358% because innovation solves problems. And although there's since been a 60% decrease, there is a whole new set of problems coming out of Russia and Ukraine that investing traditionally might not be able to take advantage of. Wood revealed that from the strategies of her playbook over the last 5-year period, her company is well above a minimum hurdle rate of return, which is 15% at a compound annual rate, and for about 3 years has been closer to 25%. So that puts the preference into the perspective of how believing in innovation pays off. She firmly asserted that innovation solves problems, and with the heat on for independence from fossil fuels and generating energy from clean renewable sources, there's going to be a lot of pivotal demand and substitution into electric vehicles as opposed to gas-powered vehicles. Drawing from present ongoing events, she forecasted that a rising labor shortages will also lead to the innovation for automation and is being turbocharged by the environment as the market is really hitting Tesla stocks. She can be quoted saying, "If one were to look at the next 5 years, we're the closest company that can be found to a venture capital fund in the public equity market. In 5 years, given expectations for growth with this new technology, there will be some spectacular return." Skeptics cite the stock's high price-to-earnings ratio of 345 to 52 to point out that investors might be too optimistic in their appraisal of the company's future earnings. However, Elon Musk, the CEO and founder of Tesla, is not to be underestimated when it comes to taking risks. With Tesla's relentless commitment to lowering costs through new batteries, product localization and scalability, and efficiency has been evident quarter after quarter, and the year's projects could accelerate with this trend. Musk intends to produce 20 million automobiles over the next 10 years and has thus significantly increased Tesla's manufacturing capacity. This is more than double the amount of other automotive giants, most of which are still struggling to get a handle on the electric vehicle market. As a result, many believe Tesla will significantly increase its production capacity. There's also the company's shift to artificial intelligence. Tesla's artificial intelligence leader, Andrej Karpathy, stated that the company is attempting to build a synthetic animal from the ground up. The car is a living organism that moves around, detects its surroundings, and responds autonomously and intelligently. All of the components for this artificial animal were made in-house by Tesla. Wood has notably stated that she believes Tesla's full self-driving technology is top tier. While others were still trying to figure out research and development, Tesla has been collecting data for this very system and seems to be miles ahead. Autonomous driving may be a sign that Tesla will eventually become more of an artificial intelligence company than an automobile company, and Elon Musk seems to be leaning in that direction as well. This leading level of innovation can only spell good things to come. According to the Investor's Business Daily, an exchange-traded fund tracker, Tesla stock has a relative stock strength rating of 86 out of 99. This means that the stock outperformed 86% of all stocks in the last 12 months, which is a good way of looking at the big picture amid the share's current price volatility. Cathie Wood is not alone in forecasting a very favorable future for Tesla stock, as it was asserted by Goldman Sachs analyst Mark Delaney and Tesla bull Adam Jonas of Morgan Stanley, who earlier in the year stated that the business was a victor in the electric vehicle battle and raised their stock price predictions. Other top voices echoing this narrative are Wedbush analyst Daniel Ives, who recently told the investment banking division that the increases in prices of the stock were not unexpected. The shares were also given a buy rating by United Bank of Switzerland analyst Emmanuel Rossner. So, do we think her predictions hold water? Interpretation of information is often inferential and should be made with an awareness of risks, but this to us seems like a risk worth taking. An investor actually likened the electric vehicle race to a marathon, which Tesla is winning while other companies are still fixing their running shoes. We can only truly know the future after it's come to pass, but stay tuned to us as we all find out as it unfolds. So, do you agree with Cathie Wood's forecast on Tesla? Where do you think the company is headed? Comment down below.